Thank you, Lee. Good, good, good. Here you can see your chart. Yeah, don't get much better than that. Very good. How you doing? Good. David, good to see you. All right. We are, of course, a little bit early, so let's wait a little bit, see who shows up. Um, this should be today, and this should be later. Miguel, how you doing? Lots to talk about today, guys. We'll wait a little bit. Clint, good to see you. All right, we got time. Let's see who else shows up. You guys have any questions while we're waiting? By all means, throw them in the chat box. Lots to talk about today. I mean, this week, uh, and last week too. I mean, this has been an interesting ride, that's for sure. Bob, good to see you. So a little sound check here, guys. I've been told everything is working well, but can you hear me and can you see my screen? Very good. Yes, yes. That's what I like to hear. All right, good. All right, guys. Thank you very much. Um, well, small crowd tonight. We'll probably get a few more people in here. Um, questions, thoughts, ideas, guys. I know I got quite a few things to talk about. Um, let me know. Pretty wild ride on the market. Clint. Well, I think it's already gone straight up, to be honest with you. I don't want this. I mean, that's about as straight up as you can get. Let me see how much this is. I don't know why I haven't looked at that before. So let's go to SPY. All right. And let's roll this out. And let's take a look from the bottom to the top of today. That's 8.5% in 7, 8 days. So very good. And sorry, guys, I may sneeze and cough a couple times. I got something going on. Hopefully it's passing. Um, Will it continue to go higher? Well, listen, that's always yeah, I think it's a little bit more in pollen, but I hope that's all it is. I mean, this thing has been a maniac, this market. It ran through this initial resistance area. It ran through this big time resistance area when these bars came down and came down prior, and then he had a little gap in there. And it gapped through this resistance area right here. And now we're up here. You got a little resistance right here, right about where it's at. So, I mean, I would expect it to pull back here somewhere. I think it's and again, these are not recommendations, but oh, you know what? Let me show that. I always wind up reminding myself. Oh, hey, Sandy. Um, Let me throw this in there. Come on. There you go. We know, disclaimer, no recommendations, educational purposes only. Okay. So, Sandy, is it sustainable? Well, listen, there are a lot of different ways to take a look at it. From a technical point of view, I would expect it to pull back somewhere. I don't think we're going to run up to here, although certainly we could. I mean, we're a little bit toasty up here. We could go some more. We have resistance right here. So tomorrow, going into the weekend, we'll see what happens there. But I'm more interested in whether it does this. Remember, this was basically because of recession fears. We had all those recession fears. Non-farm payroll came out, it was very low. Everybody freaked. The market often, not always, but often overreacts. And I think this is a glaring case of the market overreacting to news. That's why I'm not a big news guy. I'm a chart guy. But I think, and Japan, yeah, sure. Japan had their issues. Japan's not a big player anymore. I don't know what size their economy is. I don't know if they're 10th in the world or something right anymore. But still, the market doesn't like uncertainty, no matter where it's at. So certainly Japan had its issues, but to be honest with you, Japan's had its issues for quite some time. They've had negative interest rates for a long time. Yeah. So I think this is a classic overreaction, well, just today. Let me see. Just today we had this. Let me get rid of this. We had this. We had retail sales, which is a big indicator of the market and the economy, not the market, but the economy. Where is the economy going to go? Retail sales, if they were weak, that would be a different direction. These retail sales were quite strong. They were very strong. We're looking for 0.4, came in at 1.0. I don't know why I can't. Oh, there you go. All right, there's the projected. Same thing with unemployment claims. I mean, I think this is a bit of a stretch. But people saying, well, unemployment claims came in lower. Well, yeah, I mean, that's like 0.5%. But still, they didn't scream higher. True. Retail sales higher. Core retail sales month over month a lot higher than the projection. The Empire State Manufacturing Index came in, even though it was minus, it came in better than what it was last month or I guess 2 months ago. No, last month, and then what it was projected for this month. So again, from a business point of view, that's good. So now, and it's kind of tough when every week big money is like flip-flopping all the time. 2 weeks ago, they're like, oh my gosh, we're done. And then we had some interesting numbers come out. And now everybody's like, oh, well, maybe not. Well, that's just, so again, watching the chart is really what it's all about. That's what it's all about. The chart gives us a lot clearer view of what's happening. So now, and don't get me wrong, this was a tough one. This was a very tough one. But big gap down, big gap down. But when we had a reversal day here, people started coming into the market. Buyers started coming into the market. It reminded me kind of on a less grand scale. Let me put this on a weekly. Back when COVID hit, right here. That was March, April 2020. The headlines were, that's it, we're done. World's coming to an end. You'll wear a mask for the rest of your life. You'll never be able to go out. Forget the gym, forget restaurants, forget work. You'll work from home, blah, blah, blah. You'll get a shot every week for the rest of your life. And through that entire time, that overreaction. Now, this overreaction was kind of understandable. I mean, that was freaky. That came out of nowhere. A pandemic is a little bit stronger monster than a weak economy or a recession, even though a recession stinks. But look what happened to the market. Even though those headlines, and I've talked about this a lot of times over the years, even though those headlines never stopped, this is 2020, this is 2021, and this is 2022. Through 2020 and through 2021, those headlines never stopped. Right. Exactly, Sandy. Exactly. That people realized the world wasn't going to come to an end, but some big players realized that down here. So, technically, this was a consolidation breakout. It broke above the moving averages, and this was another one. And then it pulled back to the moving average and pulled back to the moving average, and it stayed above its 20 for a year and a half. And then interest rates started popping, and then we had a little bit of a recession again in 2022. I mean, a bear market, not a recession. We had this pullback. And then again, big money said, no, this is not the end of the world. Nice little reverse head and shoulders. And then zoom. Since October, this market has just screamed. And I think the lesson here is, and I teach people this all the time, the bottom line is, I hear people all the time over the years and even up till now, people are always saying, students are always saying, people, especially students who are kind of mired in fundamentals. Oh, the market can't go any higher. It can't go any, it can't go up any more than that. It's not possible. Well, the bottom line is very simple. Yes, it is possible. Don't get involved in what you think the market should do, like it can't go any higher. Get involved in what you think the market can do based on what you see. Trade what you see. I mean, if you said right here, if somebody said, oh, that's it, the market's dead, that's a pullback, it'll drop. No, because it broke out and went higher. Just like right here, if you saw this and you were one of those bears, perma bears, and you said, I can't believe it's going this high, but all right, that's it. Adios, adios. And then it puts in a higher low, and then it continues higher, and then it continues higher, and then the bears are screaming and they're crying. But life goes on. Smokey the Bear. There's no place for that in trading. It's the chart. Trade what you see. It's been a mantra of mine for a long time. Remember, Warren Buffett has $15 billion in Occidental Petroleum. Just as one big player. Vanguard Mutual Fund Company has $7.5 trillion under management. These people, and there's way more than those two guys, that whole group of mutual funds and hedge funds and pension funds and banks and who knows what else. These big, huge money people, these are the ones that are moving the market. Our job is to watch them and see you. I mean, when you take a look at this chart, are there more buyers than sellers, or are there more sellers than buyers up until here? I think it's pretty clear that there are more buyers than sellers, more sellers than buyers down to here, more buyers for sure than sellers here. So, you can keep chart trading, not chart, well, chart trading, but chart reading simple. You can keep it very simple. Lesson, that's the lesson I like to teach all the time. Keep it simple. Don't think, that some people say, well, I'm telling you it's not going to do this, I'm not going to do that. And well, okay. You can tell me all you want, but I'm going to trade what I see on that chart. All right. So what do you guys think about that? Questions, thoughts, ideas? I mean, that's a beauty. Yep. I agree, Lee. It's just a trading philosophy. And it should work out well. It's not always going to be right. Nothing's always right. Sandy, trade price action. Miguel, absolutely. That's right. Because we're not going to know what Warren Buffett's doing. Sorry, he ain't going to tell us. He's not going to tell anybody until he's done buying his whatever he's buying. And then, of course, we could buy it if we wanted to, but then it's a whole different story. But he's not going to come out and give you a phone call and say, hey, by the way, I'm going to buy another 14 million shares of Occidental this week. It would be nice. Not news action. That's right, Miguel. I like that. That's very good. Sandy, can we see what level it was at compared to the pandemic? What level it is now compared to the pandemic? Um, this is the pandemic right here. This was the pullback, 2020. So it was here. It went all the way down to 220, went all the way up to 480, then it pulled back, and now it's up to 565. This was 480. This was 220. That's how much it went up in that 15 months. Yeah. Yeah. And if you look at the monthly on the stock market, I mean, this market's been going up for a long, long time. That's 2009. Because the S&P was all the way down to 70. Now it's 565. That's a big move. Big, big move. And there will always be pullbacks along the way. There's one here in 2008, 9. Well, not as far back as we go. There are always going to be pullbacks. And again, this was the pandemic. This was 2022 when interest rates started going up. So, but, and there's no reason why you can't make money in a market like that too. I mean, I'm not saying you should always be a bull. I'm not a perma bull. I'm a little bit of a perma bull. I'd rather see things go up only because I know that, a lot of moms and pops, a lot of people who don't know much about trading, their 401s and IRAs can get whacked in a bear market. So I don't like that. But trade wise, it's great. Stuff goes down faster than it goes up generally. So You can trade it both ways. But again, if you're a perma bull and you get up to here and it's this has to go higher, but it starts pulling back, well, then you got to be able to change tracks, change positions, change directions. Yeah, sure, Sandy. Excuse me. You can day trade anything. Yeah. I mean, you can day trade with puts, you can day trade with calls. No reason why you can't. No reason at all. All right. So we had a CPI and a PPI this week. Well, you know, you got to get used to day trading. So if you, let's say you bought this, none of these are well, it's too late now, but so you got the market opens up. The purple is the pre-market. The green and red is the, the 9:30 open market. Opens up and pulls back, goes a little higher and pulls back. Beautiful support, oversold, and then it breaks out and goes higher, or it breaks out and goes higher. But you would have been in this trade probably for a while. It never even broke the 20 period. Now it depends on here, even if you got out here, just for example, that's about an hour. So it's not like you're going to get out and you don't have to trade a 1 minute chart. I never do. I trade a 2 minute chart. Right? And you might be in for 10, 15, 20 bars. 15 bars is 30 minutes. Now you got to sit there and watch it. I've had people tell me, said, yeah, I took a day trade today. I said, good. And then I went to lunch. I said, you can't go to lunch. If you take a day trade, you got to sit there with it. You can't go to lunch. That's not the way it works. You could put in an order for it. I've done that. Sometimes I have to go to the gym only because I only have certain times of the week when I can go. So I'll put in an order. I'll put in a limit to sell it and a stop just in case it goes against me. So you can do that. But day trades are designed, and that's only a rare event. 99%, well, 95% of the time, I'm going to sit here and I'm going to watch. I'm going to watch the price action. You got to. This is how it works. If I got in here, I would move my stop under here, move my stop under here, and then hindsight is beautiful, under here, and then under here, and then boom, I get stopped out. Then you have another situation right here. And of course, I use the 2, 5, and 15. I don't have those up. Hold on, yes, I should. So let's just see here real quick. 5-minute chart was oversold at 1 o'clock right here. So let me get rid of this mess. So this is another, again, educationally, from another point of view. So these are floor traded pivots, which are very interesting. It bounced right off of it. It came down, ran up into the 20 period moving average, pulled back higher, and then broke through the 20. That could have been another trade. It was oversold on the 2-minute chart. It was oversold on the 5-minute chart. And I also look at the 15-minute chart. I like to get the 2, 5, and 15-minute charts overbought and or oversold together, but I trade off the 2-minute chart. And then you move your stop up under support. And then boom, maybe you get stopped out here, or maybe you left it here. Everybody's a little bit different, but still, you still would have got stopped out here. You're never going to get the exact top. You're never going to get in at the exact bottom. Well, you shouldn't. I mean, you could try, but if you talk to or read about the greatest traders in the world, they'll tell you that the tops and bottoms are the toughest things. It's all that movement in the middle that they look for. Tops and bottoms are the hardest thing to see. All right. So yeah, we're up a little bit in the post market, but I mean, it's and that's over now. It's over at 8 o'clock. That's not really all that important. The futures, just out of curiosity, up nothing. 29. It's too early. And tomorrow, I don't think we have anything tomorrow, big news wise. We do have housing starts. Again, another indicator of the market, I mean, of the economy. They're looking for 1.34. If we had 1.56, 1.6, then that could be, again, another piece of an expanding economy. So that's possible. Um, so we'll see. But if it comes in there, then it's not a big deal. It's kind of a snoozer. Consumer sentiment often is important to some degree because we have a consumer driven economy. So there's your consumer sentiment. Glenn, could a VWAP help you with the shorter time frames? Yeah, some people use them. I found the VWAP to be interesting, but I don't use it myself. Again, I try to keep things as simple as possible, as clean as possible. But I know some people who use it quite well. So it's possible. This is what, again, you get yourself into a paper trade account. You know, if you have Thinkorswim or TradeStation, Interactive Brokers, they all have a paper trade account. Even E-Trade, I think, does. Fidelity does not, which is weird. And go in there and paper trade the VWAP. That's what it's for. You know, remember, the paper trade account is like the driving range of the golf course. If you want to change your golf swing, if you want to practice something different, you start slicing the ball. You're like, nah, that's not going to work. I got to start doing something, make a couple changes in my swing. Well, you're not going to do that on the golf course. That's not. It's not going to. No, because you're only hitting a couple balls really over the course of time. A ton of your score comes just from chipping. Excuse me, chipping and putting. So and you don't want to practice on the course. You might hit somebody in the head, you know, and make a mistake. You try something, well, that didn't work, and then the ball's screaming to go over to the right somewhere and hit somebody's house. um, you want to go to the driving range, get a bucket of balls, 30, 40 golf balls, and you hit them. You tee it up, you hit it, and you say, okay. And you hit another one, the same thing in your paper trade account. You take a few trades, you take as many trades as you want. They don't count the trades you take. Take a ton of trades, see how they work. Paper trading is not really, if, from my point of view, isn't really about performance. Ultimately, it's about performance because over the course of time, you want to get better, but it's not really about performance every single trade. A lot of people, all they want to do is take trades and then they keep track of their winners and losers, which is fine. But you really got to have a journal with your paper trade account and see what you see. What do you see? Did you take a trade that was too big, too small, too early, too late? Wrong sector, wrong, anything that you can do better, you're going to see these kinds of things in your paper trade account. Mini golf, yep. Absolutely, Sandy. Um, so yeah, all right. We're gonna do a little survey. Survey time. How many people here, and I want you to be honest, use your demo account? I mean, like, use it to learn. Let me see some hands here, guys and girls, guys and ladies. All right. Yeah, Clint. Very good. Miguel, how many people here use their paper trade account, especially to learn, not just to take a couple trades? You know, I took 2 trades last 6 months and then, I mean, how many use it on a regular basis and they use it to kind of learn from the trades they take? Lee, very good. Sandy, excellent. David, I know. Yep, very good. Bob, don't get away from it. I'm telling you. Test the strategy? Absolutely. Absolutely. If you're going to take a new strategy, you're going to do something different. The paper trade account is where you create great habits. That's what great trading is about. Rules and habits. And that's where you can practice those habits and those rules over and over again in a safe environment. And then you can journal what you see, make changes where you need to. And listen, some people say, nah, it's not real money. Okay, I get that. Even though, yes, that's the whole idea. There's no reason why you can't trade real money too. Doesn't have to be one or the other. You can do both. So don't be afraid to do both, guys. Seriously. Boost your confidence. Absolutely. Danny, absolutely. You'll become a better trader if you can practice your trades. I mean, you can take a zillion trades. I tell people at least 30 closed trades as a sample size, minimum. That takes a while. I could take 3, 4 months or more. You know, a trade you put in a trade, it takes a week to trigger, and then you're in there for 2, 3, 4 weeks. I mean, there's time that's going to pass if you do stuff like that, and you could take more. Practice, guys. It's a beautiful thing. It will help. Absolutely will help. All right. So tomorrow, keep an eye out. We do have a couple things that could make this news hungry market jump around. You never know. Again, consumer sentiment, building permits, they're not the highest up on the list, but you know, housing starts. Um, you know, this is a interesting time in news relative to the market. So keep an eye on it. And again, it's not what you think that news means. It's what the market, how the market reacts to that news. So housing starts 8:30 and consumer sentiment 10 a.m. All right. So and then of course we saw excuse me. Get rid of this. All right. CPI came in as forecast, which was good. CPI year over year came in, you know, again, is this market really going to get excited because it came in 0.1% less than what it was forecast? Probably. So this is a very news driven market. And Sandy, yeah, it should. It should feel like real money, paper trading. And you should look at it as real money. You know, my funny story. I've told a story a million times. I'm not, I probably told it here too, but it's good to maybe I can do it again. I had a guy one time years ago, and he was in a mentoring scenario with me, and he had never traded before in his life, brand new, not a single trade anywhere, stocks, options, nothing. And he had a TradeStation account. He opened it up, and he was paper trading. And he sent me an email 3 weeks in and said, Glenn, you got to look at my my paper trade account. I'm up $27,000. I was like, wow, this guy's going to be the next Warren Buffett. So I go in, I take a look at his history on TradeStation, and I said, Joe, how much money roughly are you going to start with when you start trading with real money? And he said, probably about $10,000. I said, okay, but you've bought 1,000 shares of Apple. At the time was $250 a share. That was $250,000 worth of Apple, and you're going to start with $10,000. No, that's not the way it works. You're there to create habits, trade the same relative amounts that you're going to trade. If you normally take 2 option contracts, don't buy 50. I mean, if you want to, you can. But you should keep it relative to, remember, you're trying to create great habits. So practicing in the same basic vein that you're going to be trading in is usually a better way to do it. All right, just a little thought. I have seen stuff like that. They say, well, they give me $1 million. Yeah, sure they do. But, you couldn't buy a hamburger with that. So keep it cool, keep it realistic. All right. Couple stocks today. We looked at the market. Let's see. Tesla. Anybody have any stocks they're interested in? Tesla moving, not a recommendation. Of course, we know that. That's right. So this is a pattern for me, although again, this is kind of a tough one after this big, huge, funky market. But this is for me, this is I'm a flag trader, and this is a pullback flag trader for me. Oversold. We got a breakout, and now Tesla has broken out above its moving averages. This is the 20, that's the 50, right? So having a pattern, if you're a pattern trader, if you're a trend trader, you've got to have your rules. What rules do you have to get in? What rules do you have to get out? This is what you're trading all the time. I've asked people before. I said to them, why did you go long here? And they said, well, I had a feeling that Tesla right there was going to go higher. And I said, well, that feeling probably was indigestion. So not really what you want to trade with. You got it. Feelings, no, you can't trade feelings. You've got to trade what you see on that chart. Very, very important. I mean, this is another consolidation breakout right here. Now, of course, hindsight's real easy, but you had a pullback in the stochastic. It broke above, and only on a break above the top of any consolidation do I take a trade. That's the trigger. Every trade should have a trigger. For me, every trade must have a trigger. Sandy? For me now, different platforms can be different. Let me get over here. Is 8, 3, and 3. So here's the inputs right here on TradeStation. The inputs on Thinkorswim are different. A little bit different. But yeah, I've been using this stochastic with these settings for a very long time, and it over the course of time has worked well for me. They're not going to work this perfectly every time. I mean, nothing does. That's not the point. Which stochastic? Interactive brokers. That helps. Sandy, is that the one you like? Stochastic slow. Yeah, I don't use the fast one. I use the slow one. Walmart. Now, I got to tell you, this is kind of a lucky thing here. I don't usually take earnings plays, but this was such a nice setup. Again, same type of thing. And nice little consolidation here. It broke out. Actually, it broke out right here. Very oversold, sitting on its moving averages. And if this, of course, was an earnings gap. So guys, have a trade plan. Have a trade plan with rules. Scott does a lot of stuff on trade plans. I love teaching trade plans. You know, it'd be like with trading without a trade plan is like jumping in your car and driving 3 states away without a GPS or map. That's the way I always look at it. I mean, who's going to do that? You know, you tell your buddy, "Hey, where you going, man? I'm going to Atlanta." So, okay, do you know how to get there? No, I'm just going to kind of wing it and watch the signs. Okay. Um, yeah, you gotta have a written trade plan. A lot of stuff in the content library about that. It's you got to. Every business has a business plan. Every trader should have a trade plan. MMC, Bob. All right, you got a little pullback here. Kind of the same thing. What do you see here, Bob? This one's a little bit funky, but Bob is typing over the big pullback and then resumed its trend. And that's what pullbacks are all about. Remember, what is the definition of trend? Higher highs and higher lows. Higher highs and higher lows. There's another one right there. Oversold. Sitting right on its 20-period moving average. Higher highs and higher lows, higher highs and higher lows. To have a higher low, you got to have a pullback. Not a recommendation. But definitely in an uptrend. From probably October. Yep, pretty much. Started more like a little bit after, but nah, it started here. This is November. This is about when the market took off. So it's moving up with the market. Higher highs and higher lows. Uptrend, pullback, and always a trigger. So they are right there. Triggers out. You got another little guy right here. Right. Stochastic over, excuse me, oversold. Stochastic oversold. All right. Anybody else? Little, any thoughts, any ideas, any trade ideas? You know, can't tell you exactly what to do, but we can take a look. Sandy, you're typing something. Hold on 1 second. Let me see. Yeah, let's see. I don't have too much time left. Let's just take a quick look. I should be able to do a scan here. FinViz screener. If you go to screener on FinViz, earnings date right here. You can go back uh, previous 5 days, previous week, and then optionable. 67 pages. No way am I looking at that. So I'm going to look for an uptrend. I want something that's uptrending already and then gaps up. 10% above 20, 10% above 50, 10% above 200. Still too many. Let's go with a gap up. Gap up. No, gap up 10%, 1%. Gap up 2%. Ah, there you go. Yeah, David, yeah, I can put in price. I forgot to do that. So if you go over here, descriptive, and then you get, but I got a nice amount here, so I just take a look at them. But I usually put in above $15 or $20, something like that, because this does tend to bring up a lot of really cheap price stocks. See if I can quickly find something here. This is kind of a tough market for that. Well, here's one. Got earnings? Yeah. So here's earnings, and here's your gap. And then it puts in a flag. I use 3 days for a flag. 1, 2, 3, 4. And then today it broke out. Again, a $4 stock. To each their own. But that's what we're looking for. Gap on earnings, and then a flag somewhere along, excuse me, somewhere along the line. God bless. Hold on one second, guys. Ah, okay. All right. So, that's the basic look. If it's in a cleaner trend, that would be even better, but still it did break out above this resistance area. You got another one over here, but this is what you're looking for. Gap, flag, breakout. Yep, the gap would be from earnings, and then we're looking for a flag after that. See if I can find one more real quick. There's one. There's your flag. There's your gap. There's your earnings. There's your gap. And then there's your flag. Okay. All right, guys, let's wrap this up. Um, I hope this was interesting. I hope I helped out. Scott is in the wings. He's ready to go. So I hope everyone is well. Stay well, trade well, guys. And I will be back tomorrow at 9 a.m. Hopefully I'll get over this funky cold I have. Thanks, everybody. Always a pleasure.